And the first thing I want to cover is this news surrounding Jamie Dimon, which is such an interesting player in the space. Arguably one of the least trustworthy, considering he always used to attack crypto. Then at some conferences, when it involved major players like Larry Fink and BlackRock, or any banking type of events, when blockchain and crypto were brought up, he was actually pretty dovish. He actually was in support of it. Matter of fact, they even launched a strategic partnership with Coinbase, a crypto-only company, to make buying crypto easier than ever. So it's obvious they see an opportunity in crypto. Otherwise, they wouldn't offer a partnership, the largest bank in the world, with a crypto-only company like Coinbase. But then he goes ahead and starts making things very difficult for all other actors in the space, which leads me to believe that there is a great conspiracy at play, that he wants to destroy all of the competition. And arguably, it's going to be a lot harder for him to destroy a Coinbase, considering they offer all sorts of crypto products and services. Whereas the Bitcoiners, the biggest players, the ones that they want to accumulate the most, they want to destroy. So let's have a listen to what Michael Saylor says on the topic, the CEO of one of the largest, if not the largest, holder as a public company of Bitcoin. And again, if anything were to happen to his holdings or their stock, or they go insolvent for whatever reason, this could cause a collapse like we've never seen before in the entire crypto market. This is extremely important, and arguably to crypto systemically important, in the same way that JPMorgan Chase is systemically important to our current banking infrastructure in the United States.
I just want to ask you about the JPMorgan report that came out this morning, warning that strategy could be excluded from benchmarks like NASDAQ, MSCI, and it could trigger an estimated $2.8 billion in automatic outflows. That's just from the MSCI alone. What's your response to that?
I think it's a bit alarmist. I'm not so sure the numbers are nearly that high. I think actually the numbers would be much smaller. I also think it's already priced into the market by a factor of 10 if you count it. I don't think there's any relationship between the decision making of MSCI and the NASDAQ 100 or the S&P 500 index allocators. The company is an operating company. It's just like insurance companies use capital in order to create financial products, and banks use capital to create financial products. We use capital to create digital credit finance products. It's possible there are people in the world that don't fully appreciate digital credit or digital treasuries. That wouldn't surprise me. We had that challenge with bankers that didn't want to bank Bitcoin. We had that challenge with accountants that were a little bit skeptical of digital assets accounting. The accountants embraced the asset, the bankers embraced the asset, the politicians embraced the asset. We had the challenge with credit rating agencies, and they just embraced the asset. We're starting to get credit ratings. We have the challenge under the Basel Accords, where Basel Accords allocate zero value to Bitcoin, and now they've announced they're going to reconsider that. So I'm not concerned that we have these kind of concerns.
Now, in all fairness, if you are Michael Saylor, as the CEO, you're trying to keep people from being too concerned, creating panic or fear, state it's not that big of a deal, and maybe he's right in some situations or circumstances. However, it did really hurt the stock, and I think that's exactly what JPMorgan Chase wanted to do. And we really don't know who these major bankers are in talks with, or what potential risks might be associated with them doing such a thing. However, this month, JPMorgan Chase issued a research note warning that MicroStrategy, now rebranded as Strategy, faces potential exclusion from major equity indices because of their heavy Bitcoin holdings. So even putting out a statement like that, they knew exactly what would occur. It would cause a sell-off, which sparked a sharp sell-off in the MSTR stock. Now, that might not matter for Bitcoin as a spot asset. However, when they hold so much of Bitcoin as a stock, or I mean as a spot underlying asset, if the price of their stock dumps too much and they hold too much debt, they are going to have to sell Bitcoin in order to repay, which will cause a major crash in the crypto market. Maybe this is an inside job. Maybe they have some ill-willed intentions. We'll never probably fully know until years later if something like that did occur. But either way, MSTR stock dumped almost 40% in a month, down 68% from its all-time high, which, by the the way we really have to think about that, the only thing they really hold is basically debt in Bitcoin, whereas Bitcoin has not even dumped 68% from its high. And if it had, I'd be buying like a madman. I'd be buying most cryptos that I like a madman, including XRP, if Bitcoin was down 68%. To make matters even worse, it's like they're toying with the market. And yes, they probably have a bit of pull to be able to do so, considering everyone reported on the 25th of November, just a day ago, that $5 trillion JPMorgan says crypto is emerging as a tradable macro asset, and that they expected Bitcoin to potentially reach 240K long term, which I think it likely will happen in the next cycle, not this cycle, this time around at this moment in time, amid its current trade around $87,000. And so they're giving all of these high price targets, confusing the market while attacking companies like Strategy and even Jack Mallers, CEO of Strike, a crypto company. And one could argue, well, how do you know they're attacking them? Well, we don't fully know, and I'm not going to make that direct statement, but it sure as heck feels like it when they're putting out reports they know dang well are going to harm the stock of a company that holds so much crypto. Either way, we know one thing is true: whether or not we get more ebbs and flows in the markets, whether or not we experience another roller coaster or major volatility, major downside through the end of the year, whatever the case may be, one thing is sure: we are bound to get market structure as a legislation. In other words, this bill is likely going to pass, and she got wind of the fact that it might pass on December 8th. She then went out to reach out to Senator Tim Scott, who is involved in this market structure bill. And now it is confirmed that John Boozman, Senate AG chair, said he wants to mark up this committee's text in early December. In other words, a bipartisan bill they all agree upon and can sign off by December 8th. So it's possible markups could land in the week of the 15th before members leave for Christmas, which would be awesome and give us an insane start to the year. And I'm not saying it's all going to happen at once. Everyone always says that, but I do believe that this is going to provide enough confidence for major institutions to truly start entering the world of crypto in many ways that they haven't been able to in the past or felt comfortable to in the past, especially when we're talking about client money and saving their butts in the case some issues occur with crypto. And think about over the last decade, how many issues we've experienced with crypto when it comes to bad actors, when it comes to overregulation or attacks from the government. But what if all of those things are off the table? You're going to have a truly positive environment for innovation in a way like we've never seen before. So 2026, even if we don't get a strong start to the year or a strong summer, is likely shaping up to be the start to a new bull market, so to speak. And this would play perfectly into the fact that we have yet another ETF, the third of this month for XRP, under the ticker GXRP with Grayscale, which did launch it just a few days ago, and will now put probably the full force of their sales team to get on calls, to reach out to their clients and to say, hey, we are now offering XRP with 0% fees from Grayscale, which is the world's largest crypto-focused asset manager. Now, there are larger asset managers, but this is the only one that is very crypto-focused. So they are going to double down on an ETF like this, which then begs the question, why hasn't things shown up in the price? And that's just because we are currently in a weak or a shaky macro environment. No one wants to buy more risk on assets that are more volatile than most assets like crypto in an environment where they're not too sure what's going to happen with the global economy. And right now, from the TradFi markets, things have been looking a little shaky. So I do believe this is going to provide us a lot of support into the long term and build us a very strong, long base. But it is possible we continue to sell off. So even good news and a negative environment is not enough to shrug the trend. And we have to remember one thing about markets and investing is that the trend is your friend. Dow theory is one of the best theories to adopt when you enter markets.